Aviva, stock ticker AV, is a multinational insurance company headquartered in the UK. It has over 18 million customers, mainly in the UK, Ireland, and Canada, and is the largest life insurer in the UK, with 20% of the market share, making it a key player and a consideration for people looking for life insurance. It also has areas of investment and operation in China, India, and Singapore. The stock price right now is £3.90, and the stock has been suffering over the last year. It did recover from the pandemic dip in 2022, but the stock price has dropped off from March this year, down nearly 15% since the start of 2023. In this video, I'm going to do an analysis of the stock, using the balance sheet, cash flows, dividend stats, and an overview of their segment in the market. Let's get into it. Aviva's dividend yield is sitting at just around 8%, since the stock price has dropped recently. This has created a great buying opportunity for anyone looking for a high dividend yield. If we take a look at the dividend growth stats here, over the last 3 years is down 9.4%, over the last 5 years is down 5.7%, and the last 10 years is up slightly by 1.4%. The stats aren't exactly indicative of a dividend growth stock. This chart here shows the dividend yield over the last 10 years, and we can see that there has been a few times that the dividend has been cut down significantly. This shows that there is some weakness with the dividend, and does not mean that there will always be a reliable income when the economy isn't doing so well. Aviva's core business is split into insurance, wealth, retirement, heritage, and life insurance. General insurance is split into health, group, and individual protection. Wealth is their workplace pensions and retail savings products. Retirement is their annuities and equity release. Annuities is when you pay your insurer for guaranteed income in retirement, and equity release is the management of this being paid out. Heritage is the management of old pension schemes that they hold. This is just the management of monies. Then the life insurance part, which makes up most of the revenue and profit. So if we take a look at the operating profit for the UK and Ireland business sectors outlined here in the shareholder letter, we can see that the overall figure for 2022 is 1.9 billion, which is up 34% on the previous year. We can see that the retirement portion has increased by 32%, and this was outlined by Aviva as improved performance in the sector. They stated that the overall increase was based on assumption changes and a longevity benefit of over £500 million, which basically means that changes were made in the accounts based on the number of claims that were made in the last year. So the company is still profitable and is becoming increasingly profitable, at least in the short term. Now to take a brief look at some of the general metrics from Aviva's shareholder letter. Due to Aviva being a provider of insurance, they are subject to solvency requirements. Under the legislation of the UK government, they have to adhere to Solvency II, which in a nutshell is focused on being solvent enough to pay out insurance claims and also involves risk. There are other requirements, which I won't go into in this video. Looking at Aviva's Solvency II capital coverage ratio as a percentage, it is 212%, which is down from 244% in 2021. This ratio tells us how many times the funds in the company can cover the capital requirements for solvency. So, Aviva can cover their total payouts of insurance, pensions, and all other liabilities by over 2 times, which is good for shareholders to know and shows that Aviva is not going to go insolvent in the near future. Their debt leverage ratio is sitting at 31% for 2022, which is an increase from 27% the prior year. The debt leverage ratio is the metric used to tell the users if a company has a lot of debt, and the number below 1 or 100% is a good sign. So Aviva ticks a box here. It is good to note that the increase from last year is due to a return of capital to a general shareholder of around about 3.75 billion. Here we can see the cash flow of the company, named Centre Liquidity. As of the end of 2022, this is sitting at £2.2 billion. We can see that this has dropped year on year from £6.6 billion, but this is primarily due to the £3.7 billion return to the shareholders. Aviva did announce a share buyback program of £300 million for 2023. That will return funds back to the shareholders, and it's good news, showing that they have good free cash flows, and the executives of the business believe that this is economically viable. All in all, Aviva stock is at a cheap price. Their dividends may not seem so reliable, but the yield is fairly high at the moment. It seems like it is a company worth considering. I would recommend taking a look at the shareholder letter to try to understand the company and the solvency metrics, as this video was just a brief overview. I do hold Aviva, only a small holding of mine, which I bought into recently, and from this analysis, I think I'll be reviewing the current UK inflation crisis a little more to see how that affects Aviva before considering adding more to my portfolio. That is the end of the video. Thank you for watching this far into the video. If you liked the video, give it a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward, leave a comment below and I'll give you a reply. Also, you can check out the investment dashboard at the link in the description along with a range of other spreadsheets that I've built.